Welcome to the TraderMerlin Show. It is your Monday, a very special day today. Happy Women's Day out there. I hope you all said thank you and did something special for the important women in your life, because they've done a lot for us. Today's show is a little bit interesting. I'm sure I'm going to get a lot of hate mail from it because some people still have egos and believe that this isn't true. But I've been teaching and trading and investing since 1996, and actually investing myself since 96, actually teaching for Online Trading Academy and another organization since 1998. So I've got quite a bit of experience under my belt. What was interesting is when I started off my first class at Online Trading Academy in June of 1998, June 1st to be precise. It was a 1-month class, and I think there was one woman in the class, and it was like 30 people total. And that was all like the recurring theme almost every single time I took a class. It would be like 1 out of 30, maybe 2 out of 30. And I think that has to do with historical norms where the woman is not really in charge of the money. It's the man is in charge of all the money stuff. If you fast forward to where we are today, I see a lot of different things, a lot of different scenario, meaning when we have classes at Online Trading Academy or other organizations where you may have taken trading and investing classes, it now seems to be about 50-50, which is phenomenal. It's great. Women should be involved in the monetary decisions, not just of a family household unit, but also take better control of their own personal finances. And if they're not educated about it, they're going to make poor decisions. So it's a great thing to have them more involved in trading and investing. And it ushers in the topic today, which is why women make better traders. All right. Now, of course, you guys can feel free to interject along the way, but just let's be civilized. I don't want to see any hostility going on in the room. All right. So let's start. Before we talk about why women make better traders, let's talk about what makes a great trader, period. Regardless of gender, whether you're a woman or a man who thinks he's a woman or a woman who thinks he's a man or just don't know what gender you are, what makes a great trader? Number one, it really kind of for me, it's about 6 things. Number one is it's about having a plan, both trade specific and the overall encompassing plan of how I'm going to approach this as a business. Now, the reason that is so important is, again, it adds structure, it adds discipline to it. If I were to ask you all, you had your choice. You had your choice to buy a home from a guy who may have been a licensed contractor. Well, let's say he was a licensed contractor. And he built you a home, but had no plans. There was nothing. Basically, you just said, I want a 3-bedroom house. I want 2 bathrooms and a nice living room area with the window over here. You have no idea what you're going to get. 0 idea. Except you're going to get a house that has 3 bedrooms, 2 baths, and a window over here. Could be 2 stories, could be underground. Who knows what the hell you're going to get. Or you could buy your house from somebody who shows you an exact blueprint and sits with you and designs what you want in that house. You know exactly what it's going to look like. If there's any problems, you can say, no, that's not per the drawing. To me, an architectural blueprint and a trading plan are pretty much the same thing. Now, we have a lot more uncertainty and variables that can go awry in the trading world, so it's not as technical as a home blueprint, but at least that blueprint for your trading, that plan, can keep you on that path and keep you structured and allow you to get where you want to go if you make some changes along the way and adapt. Number 2 would be understanding your strengths and your weaknesses. This is where women really separate themselves from men, and I'll get to that after I go through what makes a great trader. But men, we have an ability to not admit that we have any weaknesses. We're all bulletproof. We are the best that we can be, and problems, I have no problems. You have the problem, right? So to me, this is a big challenge for most people, is identifying your strengths and weaknesses. Now, I've mentioned before, I think one of the important things that you can do is take it's called the Big 5 psychology test. And it'll tell you a little bit about your personality, right? Are you overly opinionated? Are you too stubborn? These types of things will all of a sudden come to the surface in your trading and investing. Mine early on, I would say mine was my stubbornness and my ego, my arrogance. In the beginning, when I was trading, I was extremely arrogant. I thought that I was better. I didn't need to take these classes, and I thought I could just, pin the ears back to Goldman Sachs. And in hindsight, I got my ass kicked for being so arrogant. Now, some would argue I still have a tremendous amount of arrogance, but when it comes to trading and investing, you can't have arrogance. You have to put it on the back burner. Thanks, Katie. It's your favorite show, huh? You have to put that on the back burner because the market is always right, period. It doesn't matter. Third element, so you got a trading plan, tactical business. You have to understand your personal strengths and weaknesses. Number 3, this is probably the hardest one to do. You have to have a strategy that fits your personality. I'm a pretty fast person. I'm a pretty fast-paced person. So a lot of the strategies that I like are going to be on the shorter end of the spectrum, meaning day trading or swing trading, things that give me results fairly quickly. If you're somebody, and this is, I know, a broad stereotype, but generally the older generations, they're not as quick, right? They can't, snap their fingers and do things really, really, really fast. So they're generally going to be more predisposed to doing an investment type of trading strategy where things aren't moving as quickly. Decisions don't need to be made on a split-second basis. So I think it's about identifying what fits your style and your personality, because just like I go to the dog park every single day, everybody's dog is a reflection of who they are. So if you've got a big Great Dane who's really lazy, you might be lazy yourself. If you got a little, a feisty, active German Shepherd, as I do, well, maybe you're a little bit more active. If you got a dog who's antisocial and goes sits in the corner, you're probably going to be antisocial yourself. So dogs fit their personalities of the owners. And I think your trading style will fit the personality of the owner, meaning your personality will come through. So make sure that what you do, trading-wise, style, fits who you are. Don't try to, if you're really slow, don't try to be a high-speed day trader. It's just not going to work out for you. Number 4, follows a specific set of rules, right? A specific set of rules. Now, these rules can change, but this goes back to number 2, which is kind of, number 1, which is having that plan in place. If you have a specific set of rules you follow, step 1, step 2, step 3, step 4, step 5, and you repeat that process, you can do that and have great success. And if you are, great, you're doing everything right. If you're not having success, you need to revisit those 5 steps and see, at which point was I messing up? Which one can I modify or make a slight change to one of these 5 steps? And then I'll redo that process and measure the results. This to me is pretty important because most don't have a set of rules. Most that I've experienced over the years, they want somebody to tell them what to buy. They're listening to a Jim Cramer and they're saying, hey, well, he said buy this stock, Imagine if you were that type of trader and you didn't have a set of rules and you heard from a friend of yours last night that Stitch Fix was going to have blowout earnings, right? You guys might have seen Stitch Fix today. Stitch Fix is going to have blowout earnings. Okay, great. Stitch Fix came out with earnings today. Let me see if I can show it to you since I just happen to have the numbers right here. Let's go to today's earnings. Here's Stitch Fix. All right, Stitch Fix came out with earnings, and you got someone told you that, hey, you're gonna blow out earnings, everything's gonna be great. You have an insider, and lo and behold, look, they beat earnings. They're supposed to lose 22 cents. They came out at 20. Of course, this is why part of my plan is never listen to what anybody else says, because see what happened here? Stitch Fix was down 22% today, yet they beat earnings. Aha! There you go. Don't listen to other people. Have a plan. Follow that plan and stay on track so you don't get caught off guard doing something stupid. So number 4 is having a specific set of rules you follow. How do you get that set of rules? That's where you take classes. That's where you get a mentor, or you learn and you discover on your own. The challenge with this, and as I mentioned, let's just say you have a 5-step process, is what happens is someone will go on a losing streak or they're not consistent. And all of a sudden they say, you know what? I'm going to start changing things. So out of that 5 steps, they go, well, step number 2 wasn't, I think I could have done better there. So they changed step number 2. And then they changed step number 3 and number 5. So now they're left with 2 that have stayed the same. Steps 2, 3, and 5 are different. How do you know which one was the one that was the problem? When you're making changes, change one thing at a time, test it out, see if you notice a difference there, and this is all due to your journaling, and then move forward from there. All right, number 5, this is where the women separate themselves in a big way. Ego. Don't have an ego. Ego, it was my big problem early on. I was arrogant. I thought I was better than everybody else until the market, put its size 18 boot right at my backside and told me that I was wrong. So, Boss Poopa says, School of Hard Knocks is not the best way. It's a very expensive way. There's an old quote, and I don't know who said it. You guys probably know it better than I do. They said, if you think education is expensive, try ignorance. And the market is a very, very, very good corrector of ignorance. So one thing I had to learn early on is my opinion, or getting so hung up on opinion, my ego getting in the way, would force me to hold something too long, would force me to make bad decisions. And next thing you know, those would be colossal losses out there. Market is what it is, right? We have to put our ego aside and say, here's my rules. I'm going to follow these regardless of my ego and move it back. How many steps do you recommend for KISS strategies? Well, I mean, Alan, it's tough to say here's how many steps. Some people might have a 5 steps. Some people might have 50 steps. I don't know. I'd probably say mine is probably going to be like 10. because there's, you got to look at what the price action is doing. Got to look at where the zones are. I have to calculate that zone based off of the structure of it, how it left, how it approached, what the setup is in with that zone. I'm looking at volume as well. So when I put all these factors together, then I have to go with, all right, now I need to establish my entry, stop loss, price target. But those are, all different steps. But maybe I'll do that one on a different show. I want to make sure I get through this section here. So 5 was ego. And number 6, maybe the most important one for those of you who have started since 2009. If you started trading in 2009, you have not experienced a bear market. Okay, really, come on. You had from February to March of last year was probably the biggest down drop you've ever seen in your life. There's another one coming. And when that happens, what we have to do is make sure you really have the ability to say, okay, my strategy needs to be changed. My thinking needs to move from a bearish mentality from a bullish mentality to a bearish mentality. And we may be on the verge of that now. I know some of you were asking about the NASDAQ here, which I'll get to. Don't worry about that, Pepe. Who's wrong today? I would say the Dow is wrong personally, but he says, who's wrong today, the Dow or the NASDAQ? Personally, I think it's going to be the Dow. I think the NASDAQ is just showing actually, you could argue that they're both right. Right? The NASDAQ is reflecting a move away from tech and technology that has been moving this market up. So that's a flood out from those assets. And then you have the Dow, which you could say are the more stable blue chip companies, money moving into those. So it's just a rotation of assets, and one's more technology and one's more broad market based. So, all right. All right, so what was I on? The final one, ability to recognize change. This is critical because, again, when markets change, we have to change. A strategy that you choose will not work in perpetuity. It's not going to be something that you just can implement and it never changes, right? This is where algorithms need to be reprogrammed and modified and changed. So that it's a tough one. All right, so that's what makes a great trader. So maybe we can go to the topic at hand, which, I tried to draw the graphic over here to represent that, and I was told it looks too womanizing. Sorry, I thought it was a great picture. Why women make better traders? Now, this isn't saying that every woman is a better trader or that every man is a worse trader. Some of the best traders I know are guys, but I also know some pretty damn good female ones as well. On a whole, I would say that women make better traders because some of the components that I mentioned, that list of 6 things I just went through, specifically the ego, women have a lot less hindrance with regards to ego. I do know some that have massive egos, but let's walk through why I believe women make better traders. And I'm going to totally piss off a bunch of guys in here, I know it. Don't get all huffy. This is just an opinion. Number 1, they're more disciplined. They're going to follow rules, right? Simple analogy. You're driving down the road. Man's driving the car. Woman's in the passenger seat. Guy, you're going to a destination. You're driving down the road. I'm guilty of this one too, but now we have GPS, which helps out a lot. Driving down the road, and I know I'm supposed to get to this destination. And in my head, I know how to get there, right? I'm driving that road, and I think it's a left-hand turn here. So I turn left and turn right. Pretty soon, the old lady in the passenger, she's going, I think you're lost. Why don't we stop and ask for direction? No, I got this. Another 10, 15 minutes later, I'm in a totally different city. I don't know where the hell I'm at. She's like, let's stop and pull over for directions. No, I got this. Okay. At the next stoplight, she finally rolls down the window and is like, hey, excuse me, can you tell me how to get to? That's a huge difference here. Is men, typically, myself included, we tend to be a little more stubborn and know, I got this, because as a man, it's supposed to be my job to get you safely from point A to point B, so I can't admit that I failed. I can't admit that I'm weak there. Women will just stop right away and be like, excuse me, can you tell me to get... Great. Right? Maybe now they're a little more fearful to ask for directions because of all the crazy stuff that's going on, but the analogy, I think, works, which is when there's a problem, they're going to stop and ask for help. Most of the traders that I know, the guy traders, they're not going to ask for help. I mean, a lot of times when I'm teaching a class and I can see the guys are doing something wrong, I have to physically ask them, hey, you're messing up on the order entry. You want me to show you? And they'll be like, yeah, okay, sure, you can show me, okay? So that's the huge one, is the ability for them to follow rules. I think I started off with follow rules. That was kind of an ego follow rules piece. But they'll follow those rules to a T because that's what they were told to do. There's the process there. That's the structure. Great, I'm going to follow that. I, in my early days, would have that structure and plan that my mentor in my class taught me, and then all of a sudden I would go off and do my own thing here and there, and I'd never achieve the results that I thought I was going to because I just didn't follow the rules that were given me. Number 2, this one is, I would say, probably the most true on this. Almost every single class that I taught that had women in it, they were the most risk averse. A lot of times in class, when you teach at OTA, in the equities class, you're trading live. It's only 10 shares, but it's real money. And it's not yours, it's the company's money. So they do that to get you some skin in the game. And I'll tell you what, there were some that were so risk averse, they just asked if they could stay in simulator because they didn't want to risk that money. It's like, it's not yours. Don't worry. We'll take all the losses. Just follow the rules. Whereas guys are like, oh, I'm going to see if I can bump this up to 50 shares and have to rein them back in. Or I would tell them, hey, don't trade Apple because it's the most volatile stock. And next thing you know, half the guys are trading Apple. I'm like, what the hell's wrong with you? I specifically said, rule number 1, don't trade the most volatile stocks, Apple being my first symbol out of my mouth. I'm like, well, I wouldn't do this at home on my own time. I'm just doing it in here. Well, what's the difference, right? If you're trying to learn a skill set and you have an educator who's doing this, teaching you the way to do it, and you don't do it this way, how do you expect to have results? Most of the women were like, okay, I'll trade 10 shares. This symbol, tell me what to do. Alan says guilty. It's tough, right? We all want to, I think as guys, we have this set of historical norms. One of the historical norms, which I hate, is the man has to be the aggressor, right? The man has to be the one to go up to the girl and ask her out, get her phone number, do all the dating thing. That's a historical norm. Well, I think in the financial world, the historical norm is the man takes control of the personal finances in the home, manages all the money in the house. But to be honest, on the household budget, if you're a married couple, who knows more about the personal income or the expenses of a home? Probably the woman, because they're out doing the grocery shopping and doing all these expense-related items. They know money. Get them involved with money early on and help with structure and discipline. We're definitely risk-averse. Yes, Lori. And it's sometimes it can be too much. And this is why I think if you are a couple, that it makes great partnership, because the man brings the risk, right, and maybe taking too much chances. The female part brings in the woman brings in the part where it's like, I'm going to balance that out. I'm going to make you realize, you're being too risky here, right? Okay, fine, I'll back it down, or I won't trade that one. I think it's a great way to have partnership. DJ says, women give birth. After that, anything is easy. Hands down to that one too. I'm happy what the gender I was given. That's a tough one. All right. I already mentioned the don't have big egos. So you got number 1 rule here is that women are more disciplined. They'll follow the rules. I think part of the challenge again is many people don't know what those rules are. And I've tried to in this program, give you high-level rules. Obviously, I think education is the best way to get the specifics of them all, but we do a lot on this program talking about rules. Risk aversion, they don't have big egos. And here's another one, which is definitely a gender one. And the guys, I'm going to see some affirmation from some of the guys in here and the women too. Women love to talk about their feelings. Guys, do we like to talk about our feelings? No. I don't want to talk about my feelings, right? That in the trading world is a problem, because in the trading world, if you don't talk about, let's call your feelings, that's your emotions of the trade, that's your inner dialogue that you're talking about. So for example, if you're in Stitch Fix right now, you were long because your buddy told you that they're going to have blowout earnings, that inner dialogue, if you're a guy, is one of pain and is one of, you probably need someone to talk to here. If you're a woman who's in Stitch Fix right now and you're getting smoked on this earnings announcement, you're probably going to start talking to people, right? Getting some support, getting some ideas, getting some help. To me, that is an important piece here, is the openness that I think, the willingness to seek help or admit, hey, I did something wrong here, is much more prevalent in women than it is in men. Yeah. I think men really clam up, especially with regards to talking about their trades. And, when I think, actually, I hope that one thing you guys appreciate about me is I have no problem admitting that I'm in big losing trades or losing trades, period. I actually would much rather talk to you about my losses, because that's the best learning point for me. Most of the people that I've seen that become failures at trading, people I've seen come through the trading floor and then they just disappear after a few months, what they want to talk about are their winning trades. How much money did they make? Period. And then you're every time you see them or hear from them, it's always about how much money they made. Look, I told you this before. To me, winning and making money in the markets is a byproduct of not losing money. So what's more important, making it or losing it? It's losing it. So I'm much happier to talk about the losing trades and present those to you, because in every point there should be some lessons taken from those losses that hopefully prevents us from making those mistakes in the future. I think women are much more predisposed to doing that and fixing those problems moving forward. Guys were just too damn stubborn. And I know these are broad generalizations. I know some guys in here are probably pissed off at me right now going, I'm changing, I'm never watching you again, you're a jerk. These are broad generalizations. I don't want to say stereotypes, that's kind of a bad one, but my whole program is about my feelings. Feelings, nothing more than my feelings. Oh, we won't bore you with my singing. But those are the primary reasons why I think women make better traders. And for all the guys out there, I know we got a big group of guys here. Normally there's more men than women in this room, which is that's fine. I'm hoping, and I'm pretty sure that most of you do, because you all seem to be pretty balanced people, is include your significant other, if you're married, in the decisions, right? It's a checks and balances kind of things, and you'll find that they may actually prevent you from making bad trades or making bad decisions. I think this goes both ways. I think that if you're the woman in the household who's in charge of all the money and trading and investing, bring your husband, significant other into it, or your partner, whatever it may be, and bounce ideas off each other. I think you educate them in the process as well. It makes them feel like they're more of the process. But as a whole, I think personally that I think women are make better traders. Thanks, Alan. It was a tough one for me to do it because I know that some people really take this the wrong way and they get their feathers ruffled. They go, well, Merlin, you're basically saying that men are bad traders. No, I'm not. I'm saying that inherently men have built in, I don't want to say DNA faults, but we are designed by society to be decisive. We're designed by society to be dominant, to make the decisions, to take charge. That's what men are supposed to do. Watch Leave It to Beaver or any episode or show from the 30s, 40s, 50s, 60s, 70s, 80s. Even 2.5 Men, Charlie Sheen, winning. It's what we've been ingrained to do. Well, the softer side of it says that's our checks and balances. That's our willingness to admit that we're wrong, whereas historically we're told we shouldn't be wrong. We should be making the right decisions every time, and we all know that that's not going to happen. We are going to make bad decisions at times, and when trading, it happens all the time. And if we have rules in place, if we have structure, and we follow those, then we should do all right over time. Not every time, but over time. All right. The market has numbed my feelings, Alan says. And it's probably going to numb a lot of people's feelings, right? You have to just throw that ego out the window and just call it a day. But anyway, that's my thoughts on... You guys are great. Harrison says, my internet feelings are hurt. Oh, man. People's feelings get hurt over the simplest things nowadays. It's really terrible. Like, I can't even... I'm surprised that I'm not being blocked by YouTube right now for being offensive on some level to somebody because, I don't know, the picture of my graphic, she has red lipstick. I find that offensive. Or her hair's too long. I find that offensive. I don't know, it's just the way things go. Yes, okay, it's a good... So Tom says, I've heard on average women are better traders, but men make the worst and best traders. Men own the outlier space. Yeah, I've heard that too. I don't have the stats to back it up, but I have from my limited pool of firsthand knowledge. What I've noticed is that the women who really apply themselves, going through the courses, and they're really going and saying, okay, I've got the structure, I'm going to follow it, asking for help in the XLTs or whatever program they have access to, they're most likely going to be successful, but they're not going to have the huge winners. Men typically are the huge winners and the huge losers, right? So if you're going bell curve, I think it's a great comment there, Tom. Men are probably going to represent the outliers, right? Your 2 and 3 standard deviations, oh yeah, those are guys for sure. I put a couple trades that definitely make me the outlier on certainly the downside, and I got some pretty good ones to the upside as well, where I think because of that risk aversion, because of the ability to have discipline and use stop losses and say, I'm wrong, okay, no big deal, I'll just move on, that they're going to stay in the middle of that curve and not suffer colossal losses, but also not have the monster winning days, right? If your risk says I'm going to lose $100 per day, you're probably not going to have a $100,000 winning trade. That would be an outlier for sure. Not to say that there aren't some great female traders out there hitting out of the park. Losers or losers? Oh, I don't know, Katie. What am I talking about now? Men tend to brag more about success and create the survivorship bias. Yeah, and I always try to discourage that. there's a gentleman who used to watch this show regular basis, and he loves to gloat about his winning trades. Oh, I'm up 400% of this trade. I'm up and I just can't help but to think, if we peel back the layers of that onion and really looked at your trading sheets, you might have one trade where you had a 400% rate of return. But I'm guessing overall on your entire account, which is probably 99% of your account, you're probably a net loser. But you're going to sit there and hold on to that one winner. That does not make you a good trader. If anything, you should say, I'm going to close out that winning trade and figure out why I lost on these other ones and fix that and then move forward from there. Yes, and for those of you out there who are men saying that you identify as a woman, that doesn't count, okay? We're not talking about transitional traders here. Well, Alan and others out there, it's tough sometimes not to brag, you know, especially when you're in something that, if it did what you thought it was going to do. So, for example, let's say you bought, 1,000 shares of Microsoft and you expected it to move up 3%, and it moved up 3%. You sold half of your trade and you let the second half run. And 2 weeks later, it's up 50%. That's one that I would brag about. I'd be like, man, I targeted 3%. I took half off the table, and next thing you know, this thing was up 50%. Man, that's incredible. Why would I brag about that? Because it far exceeded what I thought it was going to do. If I was bragging about it hitting my 3% gain, what's to brag about? That's what you thought it was going to do. There should be nothing to brag. I don't know. Sometimes you got to share, because the market does really crazy things sometimes, and we'll just hand you a diamond in the rough, and you're going, wow, I just got this for free. You know, I did not expect this to happen. Oh, Echo, you missed quite a bit. Don't brag, Pepe. The market knows you. He says, I made 15 points in the S&P on the open. Don't brag. I swear to God, the market has ears. It hears you. When you start really bragging and boasting, that's when the market goes, I'm sorry, you made how much today? I'll take twice that tomorrow. All right, what else do I got here in the, I always say it's a marathon, no sprint. Absolutely. In FX Green, when I first started, I thought it was a sprint. And that's all I was focusing on. But as you do this longer, you take a step back and you start to look at the bigger picture, and it is an absolute marathon. And it's a race that if you do it right, you'll run it until they put the lid down on your casket or throw you into the incinerator. I mean, it's one of those things where you can do this regardless of age. You know, there's a lot of professions out there that they'll age shame you, you know, and you can't do it anymore. You're too old. You're never too old to make a trading or investing decision. As long as you have that set of rules in place, you know, that makes it easy. All right, so I hope I didn't offend too many people. I actually hope I boosted the ego of some of you women out there to take control and you know, be more active in it. Take a step up. The world is your oyster in essence. It's all of our oysters, but I think that the stereotypes have held women back too long in this profession, and I don't see a reason for it. I think you should actually be more encouraged to step up and be a part of the discussion, whether it's personal finances or managing your own trades and your own money. Yep, I'm right there with you, Lori. I'm afraid to brag because then I would lose. Yeah, it's not that you would lose. It's just the market hears you. It's got ears. It hears you. All right, what else do I got? Let's see what else. I'm just looking for some real quick questions. You guys had a lot of great comments. This is some good stuff. I'm hoping you enjoyed it. I feel it was very timely today to talk about Women's Day. So, where we got? Oh, Richard, the old lady in the passenger seat. Well, your significant other. Okay, sorry about that. All right. Well, if you have any questions on that, feel free to send them on in. I'm happy to go deeper in detail on some of these ones, but I do have a ton of questions I would like to get to today. If we don't, we just talk about this the whole show. I'm fine with that as well because I think it's a great topic and something that we all have to deal with one way or another. I always feel like too unlucky to trade? Well, don't say you're too unlucky. So I think if you think you're too unlucky, all right, that's a great comment that you put in there. I'm a news. You got such an interesting name. Since I always feel like too unlucky to trade. Here's a problem. You have to not think that way. If you think that way, then you're going to lose. So if you come into it, I'm going to call you algebra just because it's easier for me. Algebra. If you come into this and you say, "Man, I just feel like I'm too unlucky to trade because I'm just going to lose," you will lose. I can almost guarantee it. And I'll give you a personal example. It's great because it always goes back to examples firsthand for me. I think I told you about this one. There was a period of time back in my early days in the trading floor where I had just finished my class with Online Trading Academy. It was a 30-day class. And I walked on the trading floor, and I won't go through the early stuff because that's going to be part of the book. But, a few months into my trading, I went on what I call the downward spiral, and I was just losing money every day. Every day I would lose money. 2 weeks later of this, I walked in, and I guess you could see it on my face and my demeanor. My mentor is walking towards me on the trading floor, and he's like, "Hey, Merlin, how you doing today?" And I go, "Great. Can't wait to see how much money I lose today." And he just grabs me by the shoulder, and he goes, "What?" I said, "I just can't wait to see how much money I lose today," joking. But what I did is I convinced myself before I even walked in that floor that I was going to lose money. So he says, "Look, how much were you going to lose today? What was your stop loss?" I'm like, "Well, I didn't really have one, but, I don't know, $500, $1,000, something like that." He's "Okay, do me a favor. Give me $1,000, go home, take the rest of the week off, and I'll give you $1,000 in a week." I was like, "Well, I'm not going to give you $1,000, but you made your point." So I went home and I regrouped for a couple of days and took a breather. He told me to read some books on trading and investing, and I did. But what it was is I came in with that mindset. So algebra, if you come in with that mindset that you're too unlucky, then you're too unlucky, you're going to lose. What you should do is say, "I got this. I've got a strategy in place. I don't know if it's a perfect one. I'm going to try this, and I think it's going to work. It's going to work. And if it doesn't, then you stop, you reevaluate it, you start to tweak it a little bit. But you don't have to do this with huge money. Guys, commissions are free right now for stocks. Buy one friggin' share. It's $5, $10, $50, whatever, one share, just to get you some skin in the game. But if you go in there, algebra, saying, "I feel like I'm too unlucky to trade," then you're going to lose. You have to remove that from your mindset. You cannot do that. Okay, cool. No worries. It's a pretty funny name. I like it. But anyway, you have to change your mindset. I know some people will say that the power of belief or the power of psychology is hogwash. I don't think so. I think if you believe something, you can manifest it and you can make it come true. But you have to work to get there. It's not like you can say, "I'm going to be a great trader," and say it over and over again, and you're going to be a great trader. You have to work at it. You have to make those changes. All right. Pepe says, "That means you need screen time, journal, follow, review your trades." Yes, absolutely. Absolutely. Journaling is probably one of the most overlooked things in trading. People think they take a class and then they go out and all of a sudden they're going to make great money trading. You might, but journaling tells you what you've done, how you did it, when you did it, why you did it. And as we all know, those are the key things. Who, what, where, why, and when. You put that in your trading journal, you can go back and reference. And if you had a big loser on that trade, you can see the who, what, where, why, when of what you did. And now you can work at fixing it. If you don't have those things down, you'll never fix it. And then it'll just be a loss. I like to say this, and I have to say this very carefully because people hang on every word. I like to say that I don't take losses anymore. They're education lessons, right? So to my feeling, if you take a losing trade, and let's say you lost $1,000 and you just moved on and didn't even reflect on it, look back on it, you lost $1,000. If I look back on that trade and I take a piece of paper and write it down and kind of map out, okay, what were the pieces? What could I have done better? What could I have done differently? It's no longer a loss. It's an educational lesson. It was an expensive one of $1,000, but I have to look at it as a learning experience and a lesson. Otherwise, what's the point? I have to gain some knowledge from that. PBJ said, mindset reset. Absolutely. Absolutely. DJ, I wake up every morning to win, 100%. And I can guarantee you that DJ doesn't win every single day. But that mindset, saying I am going to win today, sets you on that right path. And then the other side of it is, you can step back and say, well, and if I don't win today, it's okay. I just can't lose big. You guys remember Bob Dunn in the program? He says, my goal is to make money every single day. That doesn't happen. He goes, I lose. But the key is I'm not going to lose big. So if I lose, I just lose a little bit. That is what really will make you a professional trader. Alan says, Merlin, what do you think are good things to put in a good journal besides entries and exits? Okay, great question. So if you want to make your journal better, obviously it's your entry, stop loss, and price target. If you can, you put a screenshot of the charts that you were analyzing or something. That way you have a reference to go back through your book and look at it, because it's your personal transaction history. What I would do in there is I would add in why you made this trade. Okay, I bought it because the S&P came into a demand zone. I've been looking at a 3-day downtrend off of a longer uptrend, so I'm really buying the corrective move here. I feel like this demand zone is strong because of this, and this. What I also like to do is, I don't do this anymore, but what I did do is I would have two columns. And so let's say my trade was to go long on the S&P 500, right? I mapped out my entry, stop loss, and price target. And I have these two columns. And I would say in column one was a plus, and the second column was a minus. So the first one was all the things that would support that trade. Meaning, I want to go long the S&P 500. Here are all the reasons why I want to go long. Because it's coming into an area demand zone. It's been on a strong uptrend. We've got more stimulus coming into the market, et cetera, et cetera, et cetera. And then the negative side was, forget that I want to go long. You have to remove yourself from that because now your emotions are attached to going long. And I would say, all right, now, let's say I wanted to go short, the exact opposite of this trade. What would cause this thing to go down? And then that's why I would put in that negative column. These are all the things that could go against a long trade, right? And I just put that down there. And maybe it's we've had our first significant sell-off in over a couple of months. We are starting to make the uptrend has been broken on the intermediate time frames. We're starting to make lower lows and higher lows. Lower lows and lower highs. Now we can start to map those things out so you can get a sense as to I'm being objective. And sometimes by doing that and having those two columns, it can actually convince you to not take the trade. And I would rather somebody not take a trade as opposed to overlook some factors which may have gone against you. So you've got your entry, stop loss, and target. You've got your justification as to why, and usually it's like a paragraph or a couple sentences. You have your supporting factors out there. And then if you want, I would put a little list of indicators. Right? Put your favorite indicators. Pick 3 or 4 of your favorite indicators that you think help you the most. Moving averages, stochastics, Bollinger Bands, RSI, ADX, MACD, whatever you want. Put those on there and then just say, what was this telling me? Did this confirm the trade or not? Right? So the more pieces you get to line up and support your decision, the more confident you would be in making that trade. So that's some of the things I would do in there, Alan, is those elements to make it stronger. Yes, and I think you said, but also keep it simple enough. That's simple enough, right? I'm not interfering with the entry, stop loss, and price target. Those are all going to be pretty rigid, but it's just my feelings, what caused me to arrive at this decision. That usually is where I would make my mistakes. I would jump on things too soon. I would buy it because somebody told me to buy it, and then, that's just bad. Let's see. How important is it to create a daily routine for? I would say it's pretty important. For me, early on, it was critical because that's how I just got my flow. Now I don't really have that normal of a routine. I like it now after doing this for so long. If I have time and I see a setup, I'll go make a setup. Like a lot of times I have alerts set, so I'm doing other things, and if something pops up, I'll look over. Do I want to make that trade? I put that alert there for a reason, and then I'll make those trades. So my routine has changed a lot over the years, but I think early on, it's important to have a routine. And that routine should probably include, what's your pre-market observation? Well, I guess it really depends what asset class you trade. I look at it mine because in the past I was doing exclusively day trading of equities. So I had a pre-market routine where I come in and look at different media sources. I would get my evaluation of where the market's going to go. I'd set my Globex or pre-market levels, and then I would wait for the market to open and jump on it right away and capitalize on some big swings. If you're trading Forex or futures, it's going to be slightly different than that. But yeah, I do think there should be a routine so you kind of have this process that you do, and it's your norm. It's just what you do every single day. Tibor, are you from the old OTA trading floor? I know a Tibor from the old trading floor many moons ago. Harrison says, having good one-on-one mentors is invaluable, but hard to come across. Really hard to come across. And normally if you do find people that are going to take the time out of their schedule, it's kind of tricky in my opinion because, number one, they're going to be very expensive. And number two, and this is the hardest one, is do you really know if they're that great of a trader? Right? And some of the people that I've known over the years who have been mentors, a couple on the old trading floor in particular, that convinced everybody that they were great traders. And I had access to behind the scenes where I could look at people's trade logs, and these people were not good traders at all, and that they were actually losing money. So it's tricky to find them. I know some that they're very, very good, but they're just not going to take the time to do mentoring like that. So, it's tough to get one-on-one mentoring. That's why, XLT type things are better because you have one-to-many. It's much easier on the instructor to communicate with a lot of people as opposed to go one-on-one. Echo says, no trade is a trade itself called capital preservation, 100%. There's been a lot of trades where I just wasn't quite sure and I just walk away from it. Let's see, what else do I got here? Pro35 says, Merlin, what do you recommend as a hedge for crypto? That's a good question. As a hedge for crypto, I don't know. I have to say I don't know really a hedge for crypto Crypto's this animal that's all by itself. I noticed that there seems to be somewhat of an inverse relationship between equity markets and crypto. I mean, so what are you going to do? You're gonna short the equity markets and go long crypto? I don't know. I don't see a real hedge. If anything, you could be using options to protect yourself from a big downside move on some of the crypto ETFs if they have liquidity out there. But other than that, yeah, I don't see a hedge. Will inflation help or hurt Bitcoin? DJ wants to know. Some great questions. I actually was planning on doing a whole, Ryan, I guess you could say the US dollar. I was planning on doing a lot on crypto on Friday. So let me, DJ, let me get to your inflation one on Friday because that's kind of a bigger discussion. But I'm going to try to keep it on trading plans. So we'll go back to Alan's here. Yeah, I did see it, Alan. Alan sent in a couple different questions. So, oh boy, where was it? This is a long one. This is from Alan. He sent it over the weekend. It says, I know you don't like day trading as much as swing trading. I have to say that that's not true. I love day trading. I think day trading is the most exciting, fun, best thing because I don't trust our markets. I don't trust politicians. I don't trust Biden. I don't trust Trump. I don't trust anybody in a political office. And if they're in Washington, I pretty much don't trust them unless it's Bill Addis. But see, he lives in Washington, D.C. It's if you're on Capitol Hill, I don't trust you. I think that you have a self-interested agenda and you're looking out for yourself. There's some out there that are probably doing a good thing, but I have a hard time trusting anybody in the marketplace. So for me, day trading is the best solution for that because you're in, you're out. I don't care what they say, do, or tweet because I'm not in the market at that time, especially overnight stuff. So, continuing on, Alan says, that said, swing trading requires days, even weeks to work out, while day trades take minutes to hours. So if our goal is to get better at trading and charts are fractals that work on all time frames, would you say it's sometimes advantageous to do some day trading, figure out what's going right, wrong, in order to accumulate that experience faster? That's a great, logically, yes. If all things were created equal, 100%, I would say that being a day trader would be the best way to learn because you're making more transactions and you have more time and data points to work with in your analysis. Now, the challenge here is this. What's going on in day trading, it's so fast that you don't actually have the time to write down your trades. So what happens is your journaling aspect to this is you are not going to do the hard stuff, which is plan the trade. Analyze everything with a fine-tooth comb before you finally make it. Day trading, you're sitting there, boom, a trade comes your way, and you're like, oh, I better act on that. I mean, it's fast. And not only that, in order to capitalize on those moves, you need to trade bigger share size. So let's say, for example, I'm swing trading. I'm looking for a trade that goes over a couple weeks, and I got 100 shares. And my target is, let's say, $5. I'm trying to make $5, right? That's my target is $5 away. So really, that would make me $500 worth of profit. If I'm day trading, there's no way that same security is going to move $5 intraday. You'd be lucky if it moved $1. So what I have to do now is in order to accommodate for that, if I'm trying to make the same amount of money, I have to trade with a much bigger share size. So let's say I'm trading 1,000 shares. Now I don't need to make $5, I need to make 50 cents. That makes sense? The challenge with that is with 100 shares, you may be unemotional, no big deal, who cares? 1,000 shares starts to get not only much more capital required in your account, but you start to get sweaty palms when you're trading bigger share size like that, especially when you're trading something that's $2,000 stock. So from that same math scalability, on a longer term trade, I might trade 100 shares trying to make $5, which would be $500 worth of profit. On a day trading basis, I might be trading 1,000 shares trying to make 50 cents, which is still $500. Or you could, take it even bigger and say I'm trading 10,000 shares trying to make a nickel. That's still $500 worth of profit. Bottom line is you're trading bigger share size, which brings in a whole new element, which is that emotion. I mean, you are literally standing on a freeway of fast-moving vehicles trying to make decisions. So the challenge I see for everybody that jumps into day trading first is you still haven't refined your trading routine yet. And while you're absolutely right, Alan, you are seeing more setups. You are seeing more of all of the factors that are present in trading, but they're coming at you so quickly that you may not have the time to break them all down and learn from those. So I think starting off on day trading is a bit more challenging in that regard, because you have so many factors coming at you quickly, you won't be able to process it all. That's why I encourage people who start off to start with swings. You know, it's a little bit slower, and once you get comfortable with execution, reading the charts, get your strategy, your plan down, then yes, markets are fractal. You can move down to smaller time frames, 5-10 minute time frames if you want, and trade bigger share size. So hopefully that helped out there, Alan. Men are buying silver, women are buying stocks. That's good. Let's see. Do you have a good source for futures correlations? Yes, I do. It's off the top of my head. It's a challenging one. I think it's called More Capital Research, MRCI. Yeah. I'll share the screen with you over here. It's a good question, Mark. This is probably one of the best resources that you're ever going to find on this. You go to More Research, and if you scroll down here, you'll see one that says, oh boy, I think it's Free Futures Research. Commodity, here's intermarket correlations. So it's under the free research portion, intermarket correlations, and you get this. This is great. I mean, this gives you tons of different futures contracts and how they relate to other futures contracts. So you can see how gold relates to Australian dollar, or heating oil, or whatever. There's just a ton of different ones out there. And then up at the top, you can actually change how long that correlation has been. So we talked about 30-day correlation, 60, 90, 180. It's a great resource for you. So good question. Let's see what else. And you can sleep better at night day trading. Well, yeah, you might, Okanola, but you might also cry yourself to sleep, because remember, things happen quickly. No problem, DJ. Thank you. I appreciate it. Don't worry, Richard. I'm not going an hour today. We're going to cut it early. Is there anything wrong with just being only a day trader, nothing else? No. FX, there's absolutely nothing wrong. It's like saying, I'm the master of just absolutely horrible analogies, and I can't really think of one. But if you are just an exclusive day trader, you have to know the risks associated with it. I mean, that's the biggest problem. If you are a short-term day trader, you have to trade bigger share size to generate the income. You're not going to trade 100 shares and make 50 cents. You're like, oh wow, great, I made $50. You're not going to generate a living or an income really doing that. And it moves so quickly that most often it puts people in the wrong. The good news for day traders now is a lot of firms are not charging commission for equities, which is great, right? Oh, thank you, Ivzy. Thank you very much for the contribution. Appreciate it. A lot of people just can't handle that kind of speed. So I love day trading. I think day trading is great. Tomasino, why? Why what? Why were you looking sad? Oh, why am I keeping under 15 minutes? But I feel for chart trading, it's easier to come up with plans for intraday setups. I don't know if I necessarily believe that. I mean, I actually prefer to look at them on the daily. My end of day routine is I'll just scroll through daily charts and I look and see if I find setups out there, and then I move on it from there. So, but again, different strokes for different folks. It's just things move too quickly in the day trading world for people who are starting out to grasp it all, right? You're still learning the mechanics of how it all works. And Alan, you probably got more experience, so it's okay. Thank you, Izzy. I do appreciate it. But for those who are starting out, don't start off as a day trader. I think that's going to be detrimental. Take your time, get your chart analysis down, learn the concepts of supply and demand, learn how to map out entry, stop loss, and price target, and take the time to put those in, maybe with bracket orders or OCO orders in the system. And then once you're really comfortable, I would say take a small portion of your capital, set it up as a day trading account, and you can start day trading in that one. But it's two separate worlds, and that's why I mentioned you want to have your day trading account separate than your swing trading, because their goal is to make money in both of them. But one is I'm trying to make money immediately. The other one is I'm trying to make money over days to weeks. Challenge there is you could start off with a day trade, and what happens here when people do this happens all the time. In a day trading account, they'll start off, open a trade, bigger share size than they should because they want to make money, and all of a sudden the trade goes against them. And their stubbornness, their ego says, I can't take this loss. And next thing you know, it'll reach their stop loss that they, quote unquote, had in the system for the day trade, and it blows right past it. And then they hold it. And now they move it over to the swing trading category. And basically you just accepted a colossal loss. And that's one of the big challenges. Okay, let's see. I got to do this real quick. So Pepe says, so Merlin, who's wrong today? Deep dive. I don't know if we'll do a deep dive. I got 9 minutes left. Tesla. Wasn't Tesla great today? I love watching Tesla tank. It's a beautiful thing. All right, so let me add the YM futures on here. I don't even keep the YM because I don't really watch the Dow. So if you look what happened with the Dow, obviously you had this nice little pop-up today on the Dow futures. We breached through. Let's go back to the weekly just so you can set the context of the bigger time frame. You know, you look at this from the long-term weekly, and you are at, obviously, all-time highs today, right? So just beautiful uptrend, barring that one gigantic blip down in February and March. It has been just a continuous, beautiful line. Now, you look at the weekly, you look at the daily, and, you know, today's action is actually a little indecisive, right? You had pretty high volume pushing this thing up to that 32,000 mark for the Dow, but you have that topping tail on it, which means it's slowly coming back down. Now, it's not that it wasn't bullish. I mean, obviously it was up 0.25% today for the Dow, but it did close below 32,000. We've never gotten a close above 32K. While it's positive, it still shows a little bit of weakness. Now, when I roll through the other indexes, let's go. Here's your NASDAQ. You know, the NASDAQ, obviously tech-driven, right? We talked about this all the rally up. I think you guys probably got sick of me saying it, which was technology. These 5 stocks, Apple, Google, Facebook, Amazon, and Netflix, have been dragging this market up. You could even throw NVIDIA in there too. Have been dragging this market up. And then all of a sudden, we said it's at some point they're going to break. The money was just pouring into those companies. At some point, the money is simply going to move out of those companies and move into something else. So we actually talked about them moving into the Dow stocks because the Dow stocks are actually beaten up. Well, you can see that pessimism reflected in today's chart, right? You have more negative action going on with tech. To me, it's just a rotation of assets moving from the volatile tech companies into the more stable blue chip companies today. That's all. You know, it's where's the money going to go? It's going to move to where people think it's going to move up. In this case, you look at the NASDAQ from a deep dive perspective, it's going down. So people are locking in profits on the NASDAQ and saying, where can I take money out and where am I going to move it to? Well, I'll move it to the Dow since that looks the strongest of all of these. There's your S&P, not at highs. There's your Russell, not at highs. Close. There's your Dow. It's at highs and breaking them. So it's just simply a rotation of capital into what's moving up and what's moving out of what's moving down and into what's moving up. All right. Day trading. It's my money and I want to lose it now. I love that, Alan. It's not, hey, and I don't mean to say it that way. I apologize if it comes across that way. It's not that day traders are going to lose. The odds were heavily against day traders back in the day because we had heavy commissions, right? So it was a lot of, thank you, Rob. Appreciate that. It's a great day over here. Start my Monday off right. Making me smile. Thank you so much for the content. And in pounds, nonetheless. Man, thank you from across the pond. Appreciate it. Now I lost my train of thought. All right, well, I'll just wrap it up. Is it a bearish engulfing candle on the NQ forming today? It's a great question. Damn it, you guys are going to get me to go an hour today. Damn it. NQ. Let's bring up that NQ. You could call this a bearish engulfing candle. My problem with it is a bearish engulfing candle. And by the way, those that don't know what that is, a bearish engulfing candle are these last two, this green candle and this red candle. Now, some will say it's not truly an engulfing because it should have incorporated the tail from yesterday, meaning this red body should have covered this tail and completely engulfed the previous day. That's what an engulfing pattern is, right? But normally, an engulfing pattern is a reversal sign, and it's usually found at the end of an uptrend. This is clearly not an uptrend. Now, here is an example, a good example. Let me see if I can highlight it for you. I'm going to have my buddy come over, guys, in the next week or two, and he's going to help me set up a second camera, and I'm going to set up a drawing board over here so I can draw this stuff and be like a little classroom. Make sure I'm not in snap mode. These two right here, the two that are in the middle of that box, that red candle, that green candle, I would call that a bullish engulfing formation. Now, why would I call that a bullish engulfing formation? Because it had a 3-day sell-off, right? It was a pretty sharp drop in 3 days, and then this green candle completely engulfs, I'll do it like this, completely engulfs that previous candle, right? This guy is trapped in between those two black lines. So that is a bullish engulfing. Now, if I look at the one that we just had today, you can see the top side of it completely engulfs the green one. But if I go to the very bottom of the red candle here, you notice that the tail of the yesterday's trading action on the NASDAQ is outside. So technically, some people would split hairs and say that's not truly a bearish engulfing. I would say it's not a bearish engulfing simply because a bearish engulfing for me needs to happen on the upside. That's not to diminish the weakness of this, right? This does look very weak. And I think if we get below the lows of yesterday, you've got a pretty good Pretty big downside move here. No, this isn't the free V-Buck stream. Sorry, Empirical. Sorry to disappoint you. No free stream here. Well, I mean, you got a different stream, but not quite the one you're looking for. Anyway, does that help? You guys were asking about that bearish engulfing. Mr. B, does that help you out on that one? If I know it's easier to hit the buy button for the first time or quick investment rather than a quick trade. Well, the scary thing, Alex, is the markets have a tendency to reward you right away very quickly. That was one of my challenges. The market it felt like it gave me free money. I was like, wow, this is easy. Next thing you know, you drop your defensive guard. You're like, yeah, I got this. And then, bam, market just beats you up in a hard way. QQQ monthly looks like pre-recession. Well, since you said it, let's bring it up and show the audience. Let's go .m, bring you the monthly chart here. And what I'll do, just from the monthly perspective, so you can see that one. And you've got this rollover. And you guys remember, we did talk about this with Bob Dunn. You guys might remember. And give me a yes if you remember it. We were talking about the shooting star last week when Bob Dunn was on the show. And he says 12 times a year on a monthly candle, you can look for shooting stars or hammer formations. And this was a shooting star we talked about. That was on the end of the month for the end of February. And all of a sudden, it broke down. This is a great long-term trade short opportunity because the market on the longer-term perspective shows it's showing some weakness here. How far will the NASDAQ drop? I don't know. You know, it could very easily drop down to, let's call it the 270 mark. It's not that far away. It could very easily happen. It could also fail and rally back up. That's the beauty of trading. We don't know. But what we do know on this is it is starting to show weakness. And that shooting star last week gave us that weakness. And then we have follow through already so far this month. So there you go. Wasn't there a demand zone for QQQ? If it wasn't there a demand zone? Yeah, I mean, this is on the monthlies, but you know, we can jump out and take a peek at the weekly. You've got some loose ones back here. I mean, nothing that's really great. You know, 290. I don't see any zones on the weekly that really just scream at me. What about the daily? Nothing great. I mean, I think the 290 is probably your most logical target because you had some basing and then a nice rip out of it. You also have this gap that goes all the way back to November that, in my opinion, will probably fill. You know, does that mean we see the NASDAQ at 270? It could. Merlin, do I offer my own mentorship? No, I don't. I do this for free. I still teach classes. Well, I actually build content for Online Trading Academy, so I still work there. Bob Dunn should give me a car. I would love one of his cars. I would definitely give me a 66 Chevelle. Oh yeah, 2-door with the 454 in it. Yeah, that's what I want. All right, what else we got? Intraday, do you look for engulfing candles like limited? No, I don't, PBJ. And here's the reason why. Remember, intraday, you don't normally get gaps. What makes an engulfing work is a lot of times it'll gap up, and you need the gaps to make it an engulfing candle. So intraday on a 15-minute time frame doesn't work. It works great with equities on a daily basis because obviously the equity markets are closed at night, so you get the equity gaps. If you're trading Forex, you don't really get big gaps unless you're trading over the weekend. So you don't even find them that frequently in those types of markets. 2-minute warning. All right. Let me, I think I had one thing to show you, and that was it, and I'll wrap it up. Let's see. We had, where was it? Yep, we had one thing to talk about, and there it is. Here is your economic calendar for tomorrow. Earnings calendar for tomorrow, there's really nothing going on that's noteworthy. Tomorrow for the U.S., you do have the NFIB Small Business Index. Otherwise, it's a pretty quiet day on the economic front. There is some pretty big announcements happening later on in the week. Wednesday and Thursday, I think it's Tuesday, Wednesday is going to be the 10-year and 30-year bond auction. I asked Bill Addis to come back on the program on Wednesday to help talk about that because that's going to be very interesting, guys. I'm actually a little nervous about the bond auction going to happen this week, and it'll be great to have Bill on there to talk about it. No, there's boss, isn't there? There's a 4-door Chevelle, or does that end up being the Malibu, the 4-door? But yeah, there's the square one, not the 70s rounded one, but the 60. I think it's the 66. Oh, I still may do it. One of these days. All right, guys, that's going to do it for me. Just, damn it, we hit the 1 hour mark. I was trying my best to get out, but you keep pulling me back in. Anyway, all right, everybody, that's it for me for today. I have no guest for tomorrow yet. I might get a guest on the program, but I do have guests for Wednesday and Thursday, and then next week we got a pretty full assortment of guests. You can find out some of the names on the TraderMerlin website. I did update the calendar on the webpage, so if you want to kind of see who's coming up. And also, you guys have done a great job of sending me people you want me to get in the program. Keep doing that. I'm just falling behind with so many other projects and trying to buy a house that I'm a little bit overwhelmed right now with a bunch of stuff. But keep sending me requests to get people on the program. Again, if you know them personally, just tell them to email me, and I'm glad to get them on the program, depending on who they work for. Obviously, you guys know there's some organization that will not allow anybody from that program on the show. Anyway, that's it. We have officially eclipsed the 1 hour mark. So I guess I will say thank you. Thanks to all the women out there. I hope you appreciated today's show. If you did, give me a thumbs up. If you're new, do me a favor, hit that subscribe button, share it with your friends. And until then, I will see you all tomorrow. Happy trading. Take care.